First things I learned early on was you really truly have to listen when you're talking to clients. And my family history is we're not one of great listeners, we're great joke tellers and storytellers, but listening is key. And when I say listening, I am talking about kind of peeling away the layers. We've had a number of clients come to us over the years with ideas about how their money should be invested, typically hearing from peers or relatives about how much money they're making on their investments and they want to be more aggressive. Then when you start talking to them really about their short-term goals and all of a sudden you start talking about the risk of volatility and losing money, things can kind of change. I'm reminded of years ago, we had a big developer in the Chicagoland area come to us and was not happy with the returns they were making on their bank money. Was anxious to get fully invested in stocks and so forth. But as the conversation moved on, talked to them about the perhaps some short-term goals. He did mention that, well, from time to time, farmers will call after many years of inquiring about their property being for sale. He said at any time a farmer could call and I may need a couple of $1 million to buy that property to develop. At that point, you have to kind of stop the presses and say, well, then you do not want to invest this money in things that might be volatile. So that type of thing will come up from time to time, just from listening to really what their goals are. I think something else that kind of a watch or a catchphrase for us at McCabe and Associates is, if all of your investments are making money every year consistently, a pretty good chance that you're not really properly diversified. Chasing returns can be dangerous. What we've also learned and help educate our clients about is that every asset class has their day in the sun. And I'm reminded of back in the late 90s, we would have clients come to us and talk to them about how their brother-in-law was making all kinds of money in these tech stocks. And they just continue to ask about why do we not have more money in the investments that are earning double-digit rates of returns. And we just impressed upon them that there's going to come a day when that's going to break bad. That was termed the tech wreck, which was the early part of the 2000s, when a number of these stocks lost 80-90% of their value and took anywhere from 10 to 15 years to get back to where they started. So diversification is really important. We understand the frustration when all of their investments aren't earning those great rates of returns, but we are reminded time and time again that you do need to stay properly diversified. On that note, bear markets are painful, but they're a necessary part of investments. And being in this business for 42 years, we've seen our share of them. I think the most severe was the 2008-2009 great financial crisis. And I will tell you that when you are losing money on your investment portfolio, it seems like it will never end. And it's those times when our advisors here at McCabe, we've always stressed staying in close communication with clients, but it's really important to continually communicate with clients. Even though it might feel like the end of the world, it just isn't. I remember sitting in this conference room right here back in those days of 08, 09, many clients calling us, asking us if their money was even safe at the bank, if they needed to go and pull out all of their money. I will tell you that's as unnerving a situation as anybody in our industry could go through. But I remember sitting in this conference room, and it sounds very simplistic, but looking out this window and at the traffic going by every morning and every evening, because we would meet first thing in the morning and at the end of the day, just seeing people going about their business, still going to work. They're going out to the mall. They may not be shopping or spending as much money, but the world continues to turn. And I think even that simple view educates us that the sun will come up tomorrow and things will get better. As I enter the retirement phase of my career, I'm asked what has changed, what's different than when I first started out. And the one thing that comes to mind is what I call information overload. The tried and true principles have always remained the same. Properly diversify, don't chase returns, and I really do tell people, put as much emphasis on saving your money as you do on your investment choices. People tend to put the cart before the horse and ask, what's a hot stock tip? Should I be investing in Bitcoin or in this or that? And, kind of our mantra is, let's just sit down and talk about your cash flow and let's find a way to save as much money as you can. in the most tax-efficient way as possible. When I say information overload, I am reminded back in 1987, the Dow Jones Industrial Average lost 22% in a day. If that were to happen in this current time period, people would be, again, jumping out of their buildings. What was unique back in 1987 is there was one business nighttime show on in the evening. It was called Nightline. For those of you in my age bracket will remember Ted Koppel and Nightline. And I think he touched on the subject for maybe a minute and a half, and then moved on to the other daily events of the day. And as I look back on that, I think in some respects that was a good thing, because people weren't getting pounded 24/7 with all the negative news. And I would also point out when that happened that 60% of that loss was recovered within a few days. And in fact, the Dow Jones Industrial Average finished in positive territory for the year 1987. I do not tell people to stick their head in the sand and do not monitor their investment portfolio. But I do think in this day and age, I think people are spending too much time looking at their investments on a daily basis, and it can really adversely affect your long-term goals and the planning. And people will, I think I've seen or heard tale of people making some very short-term irrational decisions. So again, as advisors at McCabe and Associates, our goal has been to not just tell people everything's going to be okay, because that's going to ring hollow, day after day, week after week. But really to, tell them, listen, let's history be our guide in some respects, and let's see what's happened whenever the stock market has taken a big hit or going through a bear market. We realize here at McCabe, it's painful, and it seems like it's never going to end. We all know that it will end at what point. Frankly, it comes down to a lot of people want to just be told, am I going to be okay? Tell me it's going to get better. And by going through and looking at history and what we can normally expect to see happen, we've allowed people to kind of stay in their seats and not run for the hills. And I think that's probably the proudest part as I look back on my career, is that I served an integral role in helping people achieve their goals and not make those bad decisions.